Alright, so we know that we record financial information. The source document goes into our journals, and then the balances of our journals get recorded into T-ledgers or ledger accounts. So each ledger account, we know that a debit and a credit entry is recorded for every transaction. However, they're not obviously recorded in the same ledger. So we become a bit out of balance. Lots of things can happen in a month or a reporting period. So in this instance, we've got our bank, which is an asset account. So it's a debit side, so these are all the increases. We've had cash sales, debtors control, so we've received some money from debtors. Over here, we've paid out wages, we've paid out rent, and the owner has withdrawn some cash. So this is the total of our credit side, and this is the total of our debit side. As you see, our debits outweigh the credits, which is great because it means that we've actually received more cash this month than we've paid out. So what we're going to look at is a process called footing. It's an informal process to calculate the balance of an account. You can foot a ledger at any time, so if you just it's basically getting yourself a bit of a running balance. Am I in the black or am I in the red? That's a traditional way of looking at it. Do I have money in my bank account, or have I spent more money than what I've actually received? So see how the actual totals are out of balance. So the debit side is $21,900 and the credit side is $19,250. The difference between these two is the amount that we process to our general ledger. So our general ledger is just a summary of what we've got left. What's our debt? If we've got more debits than credits, it's just the difference. Our liability accounts would have a credit balance. Otherwise, we don't have a liability. So, and so we just record this amount, the difference between the two totals. So in our general ledger, therefore, we would just have bank debit $2,650. We foot the ledger in grey lead, or just by writing the difference on the appropriate side of the ledger and circling it. Like I said, you can foot ledgers at any time during the month. It doesn't close anything off. It just gives us a bit of an idea of where we're at. So footing involves adding up each side of the account, the debits and the credits, or the ledger account, subtracting the smaller value from the larger one, and then penciling the balance on the side of the larger total and circling it. So a trial balance is just a list of all the accounts in the general ledger and their balances to determine whether total debits equal total credits. And this is done pretty regularly because we can't always rely on getting it right at the end of the reporting period. If something's going wrong, we want to know about it sooner rather than later. So a lot of businesses would probably just print out a bit of a trial balance at the end of the day just to see how things are going and making sure that everything is nice and even. The good thing about the trial balance is it will reveal errors if two entries are recorded on the same side, so it'll be out of balance, obviously, by that amount. If only one entry has been recorded. So once again, you've just sort of got to find it. And these errors are really, really great. I love these sorts of errors because they're pretty obvious. If particularly this one, if only one entry has been recorded, so if it's a $23 purchase, say my bank account will have an entry for $23 and there'll be no other entry which actually matches it. So what I'd do is I'd see that my debits and credits were $23 out, and I would just actually scan through my my ledgers and just see if there's any $23 transactions. So they're nice and easy, actually. They're pretty good. And then if a different amount has been recorded on each side, you can track that through your trial balance. It's not a foolproof system though, so errors a trial balance will not reveal is if a transaction's been omitted altogether. If we just haven't recorded it, then obviously it's not just had a credit or just a debit entry, it's just not in there, and so everything will balance. It's just that it won't reflect exactly what's happened. if the debit and credit entries have been reversed. So that will still balance, but cash is always a good one to look at. If my bank, if I've actually, instead of receiving money into my debit side and, having a revenue account with a credit entry, so there's my debit and credit, which is what it should be, just say I've actually recorded in my bank account as a credit entry and then in my revenue account as a debit entry, which doesn't really make sense, but that's something that won't be detected. If a transaction recorded in the wrong ledger account, so if I've actually, instead of putting it into bank, just say I've put it into a debtor, it's exactly the same. It balances, it's still an asset account, but it actually won't reflect what my bank account should have. So when I come to do a bank reconciliation, it won't add up. And then an incorrect amount recorded on both sides of the ledger. Transposing the last two numbers will mean that any difference is divisible by 9, so that can sort of be a good way of looking at it. But if I've put it in at $23 instead of $25, it's not going to be correct, but it won't be easy to actually pick up. Where are we here? Okay, so balancing is actually different from putting, as it's done only at the end of the reporting period. Only asset, liability and owner's equity accounts are balanced. We don't actually balance off revenue or expense accounts. And it's a more formal process. It involves proper double entry. So we don't just circle it in grey lead, we actually do the sums and that's our final figure for the period. Balancing involves we rule off an asset, liability or owner's equity account to determine its balance at the end of the current reporting period, and then transferring that balance to the next reporting period. So it's still adding up both sides, but we put the greater amount as our balance, and then we carry forward. So we actually have a carrying amount. What I'd like you to do is turn to page 66, and I want you to see figures 4.9 and 4.10 for an example of balancing.